Cool. Good evening, everyone. My name is Dwayne de Oliveira, but Nigel, seeing as I'm a visitor here, perhaps you want to just open the front door for me, maybe?
All right, everybody, I'm not feeling well at all. I've got a terrible flu, so I'm not going to be long. Dwayne and I go back quite a long way, easily now 5.5, 6 years. Dwayne is involved with the United Royal Kingships, as you are aware, what I'm involved with the traditional local councils, and he also is the CEO of TipOne, which is a listed fund on the Cape Town Stock Exchange. So, like I said, I'm not going to talk too much. Dwayne, I think that's enough of an intro. You can tell everybody what TipOne is all about. All yours.
No, thank you very much, Nigel, and good evening, everyone. Thanks for making the time. I think I've got kind of 4 or 5 main points this evening to chat about. One is to just sketch a brief background and intro into what TipOne is, what it stands for, what it seeks to do and seeks to achieve. 2, to give you a bit of insight into the TipOne portfolio. 3, to discuss the investment opportunity at hand, i.e. the Spear REIT BEE deal opportunity and how it fits into TipOne. And then 4, look at the next steps around the opportunity. It's not going to be a very technical, I'll try and steer away from a very technical investment focused discussion, but rather around a commercial discussion to say, what is TipOne, what is the opportunity, and what does it mean for potential investors in TipOne. Please, Nigel, I'm not sure how you handle Q&As, but I'm happy to take as you go along or kind of make a summary of them at the end. I'm happy to be guided by your normal course of action.
Dwayne, that's up to you. If you feel comfortable taking questions during the session, that's quite fine. I'm going to hand over control of the meeting to Karen now.
Okay, fantastic. So I'll take them as they come. It's not a problem. So TipOne. TipOne stands for Transformation Investment Portfolio. And one is really just, it's the first one in a number of what we call tips to come along, right? The basic ethos and the basic vision around TipOne is what it says at the bottom of the slide. And that's how do we democratize and transform capital markets in South Africa? Now, that's just a long, fancy phrase for saying, how do we make it easy and accessible for the average man in the street to participate in the capital markets in South Africa, right? Capital markets are split into 2. You get what's called an equity capital market and you get a debt capital market. Equity capital market relates to listed and or unlisted equities and how they are positioned in the marketplace such that capital is attracted to them. So in a listed equity environment, you've got a listed share on a listed exchange. So that's the market, and equity is the subdivision of the capital market. And then it just says that you've got an equity product, which is listed on an exchange, and how do investors who are equity investors, how do they invest into that? Now, there's always a lot of, call it mythology or mysticism or lack of understanding around these capital markets and around opportunities, and some of it rightfully so, but on the majority of it, not necessary, right? These are simple terms which need to be able to be explained to the average investor in the street. And if we're able to do that, you then have the makings of a viable investment proposition. So TipOne, that's really what it looks to do, is how does it create easily accessible, easy to understand investment opportunities in the listed and or near listed BE space, such that the average investor is able to participate in that opportunity. Just keep that in mind as we move through the presentation. Yeah. So TipOne. TipOne is recently listed on the Cape Town Stock Exchange. Some of you may or may not know that we have a number of stock exchanges in South Africa. We don't just have the Johannesburg Stock Exchange. And when we say it's listed on the Cape Town Stock Exchange, that is a stock exchange that is licensed and regulated under the necessary Financial Services Conduct Authority regulations. Okay. TipOne as a product is the first of its kind in South Africa. No one has done this before, and no one is doing it at the moment. And there's a technical reason for that, which we can expand on as we go along. But basically, TipOne is looking to build a diversified portfolio of investments into BE schemes. And those schemes are in turn invested into listed companies or components of listed companies. There's a diagram on the next slide, which will break that down quite nicely. As a BE investor, TipOne can acquire investments at a significant discount to their underlying value, which boosts its long-term returns over time as these discounts close out. What does that mean? In short, BE legislation, the BE framework in South Africa is there to advance the causes of empowerment, broad-based empowerment, and therefore asset prices or investments are typically offered at a reduced price, i.e. a discount. What will also happen is the scheme will have a natural maturity date at which it will close out, at which it will end, right? That's true for a majority of them. Not all of the schemes are that way. But what that means in essence is that at the end, i.e. the maturity of the scheme, investors in that scheme will be paid out at the net asset value of the scheme. If you contrast that to, say, a other investment holding type of entity which is listed, such as maybe Brimstone, Grand Parade, Remgro, those businesses hold investments in operating entities where there is no natural closeout of a discount, right? So those management teams of those entities are there to extract value out of the operating entities. So classic investment theory, where they want to buy low, invest in an entity, and sell high. TipOne is a little bit different. TipOne doesn't invest in operating entities. TipOne invests into companies that are shareholders effectively in an operating entity. So TipOne does not have to get involved in the management of the schemes. TipOne chooses and invests into schemes across a set of investment principles. And through that investment, it then has the discount close out naturally over time, or investors are rewarded with a higher than normal yield. And again, we'll explain that as we move through the presentation. Okay. The underlying investment portfolio is held by TipOne, and TipOne is a listed tradable share on the Cape Town Stock Exchange that's permanently majority black owned and controlled. And this allows for mandated and other investors to invest up to preset shareholding limits. Simple terms, for as long as TipOne is 51% black owned and controlled, the other 49%, you can get pension funds, and you can get, for want of a better word, you can get white investors to invest alongside black investors. We believe that makes TipOne truly broad-based, not just from a race perspective or a color demographic, but can take advantage of all forms and all sorts of LSM or income or social standing as well, right? How does TipOne conduct its investments? Investments into BE schemes are typically implemented using cash, or you can swap. So TipOne raises money in the markets from investors. It then goes and buys schemes, or TipOne says, I have an asset base of 100 Rand as an example. I go to someone that holds a BE investment and I say to that person, why don't you swap your BE investment for shares in TipOne such that we do a share for share transaction. Why do we do all of this? We do it because we believe it solves three key challenges that BE investors face, right? Typically, you have long-term lock-ins. In other words, you buy a share, and because it's being sold at a BE discount, you as an investor are locked in for a certain amount of time. An example of this is MTN Zakhele Futhi, where there's a lock-in, right? You would have seen in the press, there's talk of Old Mutual bringing out a scheme as well called Bulatsela that's got a 10-year lock-in. So you can't sell until such time as the lock-in is over. Because TipOne is a shareholder in the scheme and investors are shareholders in TipOne, TipOne takes on the lock-in requirements for the scheme, such that an investor in TipOne is able to trade their shares on the Cape Town Stock Exchange, right? The second challenge that we believe it faces is that there's limited or no diversification usually if you're a BE investor. So you read in the news, you read in the paper, you're fed information, you speak to your friends, you speak to your colleagues, and everyone says, buy Yebo Yetu. Everyone says buy Zakele Futhi. Everyone says buy Putumanati. Everyone says buy SAB Kabili. You end up having to do a lot of work to understand just one position, whereas TipOne provides you with a single entry point into all of those shares. TipOne effectively takes on the investment management, the investment origination, and the investment execution components of those schemes. And thirdly, this is something we're very excited about. It's not quite there yet. It's in the pipeline. There you have a BE scheme investor that typically has an inability to borrow against the standalone BE scheme. So I'll give you a practical example. Yebo Yetu is a shareholder in Vodacom, right? If you hold Vodacom shares, the bank will gladly lend you against your Vodacom shares, right? But say to them you've got Yebo Yetu shares and you probably won't be able to access debt funding against your Yebo Yetu share. What we're looking to do is say to the markets and providers of debt funding, essentially it's the same share. Yebo Yetu's only asset is Vodacom, and therefore it's holding. Your holding in Yebo Yetu is as good as your holding in Vodacom. It's a little bit of an education process to still go through with debt providers, but that's certainly something that we believe would be quite exciting and really unlock additional wealth creation and investment opportunities. So that's just an executive summary on TipOne. What's our vision? Our vision is quite clear. We believe in a single platform, i.e. the Cape Town Stock Exchange. We want to take advantage of double discounts. Those are BE discounts and call it lock-in discounts. In other words, if you hold the share to maturity, you make your money. And then naturally, our little formula then says, if you're investing through a single platform into these schemes, taking advantage of our discounts, we're looking to make triple BEE investment easy. We have a slogan which says Inside Insight. That's been our trademark slogan. And that says TipOne is able to provide inside professionally qualified advice to BE investors who typically transact on emotion and who typically transact on hearsay. Give you an example. The recently not so recent anymore, but SAB Kabili was launched to much fanfare given the success of the previous SAB scheme. We believed it should have had a launch price of 40 Rand based on net asset value calculations. The price listed at 40, it went up to 120. It's back down to 54 Rand at the moment. So you can see what effect emotion and you can see what effect market whip, as we call it, has on a scheme. So if you had bought in at 40 and you sold at 120, congratulations, very good, well done. But if you had bought at 40 and if you had bought in at 120, you're kind of stuck. But we've got a solution for that. So that's our vision, right? You may say that's great, but what have you actually done? So at the moment, TipOne, as I've mentioned, this is listed on the Cape Town Stock Exchange. That listing is live. You can go and trade TipOne shares. And in its current form, TipOne has got shares in MTN Zakele Futhi. It's got shares in Yebo Yetu. It has shares in Putumanati. It has shares in Solbi One. So if you recall where I spoke about TipOne investing into listed or near listed BE schemes, right? MTN is the listed component. MTN Zakele Futhi is also listed on the JSE, right? Yebo Yetu is listed on the JSE. Vodacom is a listed entity. Putumanati is listed on what's called the Easy Exchange, which is run by Singular Systems. Its asset is MultiChoice. Solbi One is listed on the JSE, and Sasol, as you know, is listed on the JSE. What you need to understand about each of these investments here is that MTN Zakele Futhi only holds MTN shares. That's its only purpose. Yebo Yetu only holds Vodacom shares. Putumanati only holds MultiChoice shares. Solbi One only holds Sasol shares. So you've got ring-fenced investment holding structures into which TipOne has acquired a position. So, for practical intents and purposes, if you were to invest into TipOne, your investment would go into TipOne, and TipOne as a holder of the tip one, sorry, no, it's not the holder. Tip one is the executor of the investment would have this portfolio of shares. Our target investor base are retail investors, communities, institutions, and other investment houses. So in a nutshell, when we talk about a BE scheme, this is the BE scheme that we're talking about. When we talk about its investment, this is the underlying investment. So you'll see it's not a speculative portfolio. You'll see it's not something that's a hedge fund. It's not something that's a private equity fund. It's really a portfolio of listed or near listed BE schemes, which are properly qualified against a price. Right. So what are the benefits for tip one benefit? If you're investing into tip one, why would you do it? Right. So you get a share that can be traded. As we mentioned, you may be subject to a lock-in on a certain individual BE position, but through tip one, taking over that lock-in requirements, you're able to trade your tip one shares. Right. Furthermore, those shares I've mentioned earlier, these ones, there's Akele Footies, Yebu Yetus, Solbis, not so much Putumanati in reality, are quite illiquid in that there's not a readily available buy and sell a marketplace. Whereas tip one is looking to create better liquidity in the marketplace, right? So that takes care of point one and point two. Diversification naturally leads to a level of investment and investor protection, right? You have low transaction costs. That's because tip one is listed on Cape Town Stock Exchange, and the brokerage and listing fees are generally lower than on the Johannesburg Stock Exchange, which allows us to pass through that saving to investors. You get a professionally managed portfolio of investments, and the benefit to the underlying entity, i.e. Vodacom, is that, or MTN or Sasol or MultiChoice, is that the BE entity with tip one as a shareholder retains their BE investor status. So you see the diagram on the right here. This is a single position. So you're a single shareholder in one scheme, and that one scheme owns one asset. Through tip one, you can be a single investor in tip one, and tip one has a diversified portfolio of assets. Right, so that's tip one. To move, unless there are any questions, I can move on to the REIT opportunity, the SPIA opportunity. Okay, I take it there are no questions yet, so I'll move on to the opportunity. The opportunity at hand is to invest into a REIT called SPIA. Some of you may or may not be aware of it, but given that I'm talking to largely a property audience, I'm sure a number of you are probably aware of it. But just to kind of give you a brief intro and background on SPIA. Oh, okay.
Good evening. Thank you so much for tonight. I just had one quick question before you move on. In terms of now the portfolio and tracking that, I get that it's managed, but do you have, or in future would there be like some sort of a portal where you can see maybe like what my holding would be and percentage wise or whatever the case is, or is that all just managed from you guys, or like how does that work, please?
No problem. Okay, great question. Okay, so what would happen here is very similar to if you held a portfolio of shares with, say, any other fund manager, right? You'd be able to see what your position is. So what would happen here is you open a brokerage account with A-Trade as the broker, right? You'd buy 100 tips, and what would happen is in your brokerage account, you'd be able to see, based on a fact sheet or an investment portfolio sheet, what are the different holdings that tip one has. That's at the moment. Within the next 6 to 8 weeks, you'll be able to do it via a tip one mobile app, which will be launched, as I said, in the next 6 to 8 weeks.
Okay, that makes sense. Thank you.
But you don't have to wait for that app before you transact, but that's neither here nor there. right? So I'll go on to the Spear REIT opportunity. So Spear is a REIT. It's Western Cape focused, right? It's listed on the JSE. It's relatively small in context of the JSE. Its market cap is only 1.9 billion rand, right? It currently trades at 76 rand. So it currently trades at 7.60 rand per share, but its net asset value on a tangible basis is 11.47 rand. So that gives you a 34% discount, trading discount to NAV, right? It has a 9% dividend yield currently. The portfolio consists of the following sectors: industrial, commercial, retail, and hospitality, with the relevant contributions to GLA on the right, as well as vacancy rates. Now, to maybe kind of put it into context so that you're able to visualize it, you can go to spearprop.co.za as well while we talk. But to give you some kind of indication, the industrial portfolio is made up of properties such as Mega Park in Bellville, Blackheath Park in Blackheath, Blackheath Warehouse Blackheath, Nampak Liquids in Epping, Beacon Way, Bellville, 27 Junction Road, Parow, 1 Pardon Island. And again, you know, that'll be on the website. There's further properties there on their website. True to kind of what's happening in the property space, the industrial portfolio has experienced robust demand. And that's naturally because they call it last mile delivery or e-commerce or manufacturers, you know, gearing up again, replenishing stocks such that storage capacity and storage capability is rebuilt. Okay, commercial obviously has come off a difficult time, hence it's the highest from a vacancy rates perspective, but hopefully we'll see additional commercial improvement in the commercial space. An example of the commercial properties is 2 Long Street in Cape Town, Sable Square Shopping Centre, Milnerton, Liberty Life, Century City, Northgate, Brooklyn, M-Web Head Office, Bellville, number 2 Estuaries, Century City, 78 on Edward, Bellville, Bloemhof Building in Tiger Valley, where there was a club at the top there, I can't remember the name now. You know, and again, those properties are available on the website. Retail offering, the retail holdings are convenience focused. In other words, situated in good nodes where people are typically moms and pops popping in to get what they need. An example of the retail portfolio is Sable Square Shopping Centre. 15 on Orange has got a retail and hospitality component to it. 28 Marine Drive. And again, you know, you guys who are based down in the Western Cape can comfortably drive around during or after this meeting as part of your DD if you want to go and see these properties that are there. Okay, hospitality is an interesting one. The hospitality segment of the portfolio is not subject to tourism volatility, right? There's a triple net lease in place with Capital Hotels and an apartment group. So if you looked at the hospitality section of their portfolio, 15 on Orange is in the portfolio, and then those who know the Woodstock, Salt River area, Upper East Side is in there. So it's not on a, let's call it, discretionary basis, right? It's to say those hotels, those groups have kind of signed a triple net lease with Spear. So that's their portfolio. That's where they are focused. Okay. To just expand a little bit more on it, it's a respected local property fund, and arguably, it grates me to say this as someone that's based in Gauteng. It's the focus of the property portfolio is arguably in the best investment node in South Africa. Word on the street in the property sector is that if you're going to do anything in the property sector, you want to be doing it down in the Western Cape, given the various dynamics around either municipalities or around land appreciation or the semigration of people down there. That seems to be the hot topic at the moment in terms of the property sector. The Spear management team has a credible reputation of delivering value to shareholders. They're also invested into the business, so their interests are aligned with shareholders. And so then if we said, that all sounds great, but what is the proposed transaction? I'll just do that quickly. Someone just asked for us. Let me do this quickly. Spear prop. There we go. Thanks, Mozo. Hope that answers you there. So here's the crux of the matter, right? Here's why we are talking this evening. So tip one has an investment opportunity to invest 40 million Rand into, oh, sorry guys, 40 million Rand to acquire 40 million Rand of Spear shares at a price of 765 a share. That's give or take today's price, right? The benefit and the way the transaction is structured is that tip one only needs to put in 10 million Rand of equity, and Nedbank provides non-recourse funding of 30 million Rand. So what is non-recourse funding? It just says that the loan from Nedbank is guaranteed by Spear itself. So there's no risk to the tip one balance sheet around debt. Yes, you could lose your 10 million Rand equity if it really went belly up, okay? But because of diversification in the tip one portfolio, that risk is minimized. But it's not like Nedbank are going to come after tip one shareholders for the 30 million Rand. That's not magic. That's not like science. That's not magic. That's not something weird. Most of, if not all, B transactions are structured in this way. For example, if I just scroll back quickly to this portfolio here, there's a loan in this transaction from MTN to MTN Zakhele Futhi shareholders to allow MTN Zakhele shareholders to buy shares in MTN, right? So it's the way these deals are structured, in that you get this non-recourse funding. But then that's the upside of it. The downside is that typically you are then locked in or only realize value later along the line, right? So this is a 10-year loan. And the interest on the loan will be serviced by dividends from Spear and any excess cash that is generated, right? At the end of the debt period, the value of the investment is estimated to be worth about 53.4 million Rand. And that's just taking growth in share price and growth in dividends at inflation. That's not allowing for any additional, call it, uptake. So you would have got 5.34 times your money back on this deal. That's just in terms of the Spear portfolio, right? The next slide will show you how it fits into the overall portfolio and what the additional opportunities will be there. Yes, any investment opportunity is not without its risks. We hope there's not another wave of the pandemic, but that does have an impact on return profile. That does have an impact on any investment, right? Is given the concentrated nature and risk of the portfolio in the Western Cape, if there's a deterioration in the economy, that would have a knock-on effect on the return and on the portfolio. And should there be a rapid increase in funding costs, given that there's a 30 million Rand debt facility being provided, then obviously there is a risk on the downside to that investment return. Those, in a nutshell, that's the transaction. Those are the risks. That's the opportunity on the REIT. What are the benefits and kind of why are we talking about this? What are the potential benefits to EDPF Investment Holdings would be that that tip one aids in the building of a diversified portfolio investment strategy with a palatable, digestible point of entry into the listed property sector. I'm aware that I'm talking to potential investors who are interested in property. That's why you are part of the EDPF stable. But I also know there's a big drive and a push to build a diversified diversified investment portfolio, right? But if I can speak your language, throw the rod out in speaking your language and entice you to the property sector, it then will bring you hopefully in through to the tip one stable. So you'll be buying into a diversified portfolio of investments which have dividend growth and capital appreciation. You have a tradable share during that 10-year loan period. Non-recourse debt funding. It's essentially a free carry if you think about it. What that means is your skin in the game is your 10 million. right? Yes, you are foregoing receiving the dividend on the 30 million, but it's effectively leveraging your return up such that you're making a greater return. And then you would have ongoing exposure to TipOne opportunities, including a pipeline and a watch list. What does that mean? On our pipeline and watch list at the moment, we've got the SAP Kabili scheme, we've got Baldwin Property Group on there, we've got Lenmed on there. All these are further investment opportunities that would fall into the TipOne portfolio, but you as a TipOne investor would automatically get exposure to those opportunities as they came through the portfolio, given that you'd be buying in, you'd be buying a TipOne share. And again, we believe that we buy them at the right price and for the right reasons. They also, as you would have seen through the SPEAR opportunity, opportunities come to TipOne for us to identify, for us to investigate, for us to deliberate on, and you would have seen and then provide some kind of record of advice which says this is the opportunity, and we then take that opportunity through to our shareholder base and or prospective shareholder base and say to them, we believe this is a good opportunity for the following reasons. So we take out all the groundwork, all the legwork, and present what we believe is the best view of an opportunity. So if you were to look at it, say we concluded the SPEAR transaction, right? Your TipOne portfolio would have SPEAR, Zakhele Futhi, Yebo Yethu, Phuthuma, and Solbi 1. To maybe just give you a little bit of a flavor around return profiles here. Again, this is price sensitive information that I'm giving through to you, right? Solbi 1 is, for all intents and purposes, a Sasol share, right? Sasol has not been paying dividends for the past 3 or so years, given some problems, balance sheet problems at Sasol, but given the increasing price in oil, there's talk that Sasol will be declaring dividends this year, right? There's an investor presentation on the 4th of August, which will bring that out. Solbi 1 effectively mimics a Sasol share. So if Sasol declares a dividend, Solbi 1 will be declared a dividend. So what would that mean? If you only ever did SPEAR and only ever did Solbi, SPEAR, you wouldn't receive a dividend at the moment because you're paying off the debt. But because Sasol is paying dividends, you'd be, as an investor in TipOne, you'd be receiving the dividend from Solbi, and you'd be taking, you have advantage of the capital appreciation and the non-recourse funding on the SPEAR portfolio. Phuthuma is a great example. Its investment is MultiChoice South Africa. Phuthuma regularly pays a 22 Rand 22 per share dividend to its shareholders, which is about a 15 to 18% dividend yield. And that's great. There's not very many shares or actually very many investment opportunities that will pay you 15 to 18% yield on a relatively risk-free investment. The downside is that you are trapped in, your capital is effectively trapped in because the yield is so high, your capital at Phuthuma level, it's very difficult to sell because everyone is kind of holding on to that. So again, to use the example, if you did SPEAR, Phuthuma, Solbi, you wouldn't be receiving dividends from SPEAR for the first 10 years, but you'd be getting a dividend from Phuthuma, you'd be getting a dividend from Solbi. Again, balanced portfolio dynamic. Yebo Yethu is a great example. Yebo Yethu does both. Yebo Yethu pays a dividend, but it also has a natural move to maturity. So Yebo Yethu matures in 2028. It's paid a 5% dividend yield. That dividend was declared, and actually TipOne received that dividend on Monday. And again, what the benefits here is that if you had SPEAR, no dividend, capital appreciation. If you had Solbi, dividend. If you had Phuthuma, dividend. You'd have Yebo Yethu, dividend, right? But in addition to dividend, Vodacom itself, Yebo Yethu itself has a closeout. So at the end of 2028, Yebo Yethu shareholders, of which TipOne is one, will receive their payment of NAV. Right? So you've got a natural closeout, you've got a natural liquidity event. Whereas if you try to sell a block of Vodacom shares, we try to sell a block of MultiChoice shares or block of Sasol shares, it may be more difficult, especially if you held smaller blocks. Yeah, if you had large blocks, there's always a buyer for large blocks. But at a smaller block level, it's kind of more difficult. MTN Zakhele Futhi. Zakhele Futhi has not paid a dividend to TipOne shareholders, given that MTN itself has basically had to restructure its balance sheet. Okay, but MTN Zakhele Futhi closes out in 2024, at which case there will be probably 3 to 4 times, depending on the price of MTN. We're looking at 3 to 5 times money back for Zakhele Futhi shareholders. People may say, oh, you've got debt in MTN, you've got debt in Spear, is that good or is that bad? It's bad if you can't service the debt. It's good if the debt leverages or enhances your return, okay? Servicing of the debt here is not your problem as a Zakhele Futhi shareholder or as a Spear REIT shareholder. Servicing of the debt remains with MTN or remains with Spear. That's why you might not get a dividend and won't get a dividend until the debt is paid off, because the MTN or Spear is saying, I've advanced a loan or I've stood good for a loan for you, so let me pay off the loan. Once the loan paid off, you will have an enhanced position as a Zakhele Futhi shareholder, and in turn as a TipOne shareholder. So there are some horror stories. I would take that all day around BE investments that have gone underwater. And that was largely because, one, pricing was wrong at the initial point, and 2, they were maybe too highly geared and too highly leveraged, such that the debt took an inordinate amount of time to pay off. Through a balanced portfolio, what we're looking to do is counteract those risks, to say you'll have winners and losers in any particular year. You'll have some that shoot the lights out in year 1. You'll have some that fail dismally in year 2. You'll have some that shoot the lights out in year 3. But if you have that balanced portfolio principle in place, you are able to mitigate those risks. You may say, yeah, but I'm happy to be a concentrated investor and just take Putumanati just take Putumanati positions and be happy with my 15 to 18% yield per year. No argument against that if you're purely a yield investor. However, if the divvy drops, what do? How do you get out of your position? What is your liquidity? Event? So all those kinds of things, which what we're looking to do at TipOne is take away the complexity around those things and say to you, buy a share of TipOne. TipOne invests into properly qualified, what we believe are good BE investment opportunities. Another call it benefit is that you'll note that MTN Zakhele Futhi, Yebuyetu, Putumanati, and Solbi, those are all existing BE schemes, right? So TipOne can acquire existing schemes, but also given that TipOne is broad-based in nature, given that it remains majority Black owned, we have now been approached by Spear who want to do a new BE scheme. So for as long as BE is prevalent and for as long as BE is around in South Africa, right, we believe that TipOne has a place in the sun, if I can put it that way. To maybe just kind of, unless there are no questions, please, again, guys, fire away. The investment process, I know some people are visual people, some people are sequential points people. So this slide documents the investment process visually. The next one will show you kind of a sequential point form basis. Right at the moment, TipOne is speaking to prospective investors, new and current, to say we need to raise 10 million rand, right? One of those prospective investors is EDPF Investment Holdings and its associated partners or people or alliances, however we want to talk about it. And we'd say we want to raise 10 million rand such that that 10 million rand is invested into TipOne. So you are buying shares in TipOne. The proceeds of that investment, i.e. the 10 million rand, is used for the equity requirements in the Spear REIT SPV, the BE SPV. Why do you have an SPV? Is because that's where Nedbank is lending the 30 million rand into. And also there are some of their various tax benefits, etc., into doing it that way. That's more transaction structuring. What's important for a potential investor is, one, how much money is being raised 10 million is being raised at a price in TipOne, and I'll give you that share price as we move to the next slide, right? The proceeds of that investment is going into this transaction. So it's not going to pay Dwayne's house in Llandudno or my Ferrari or my Porsche or whatever I want. The proceeds of that is going into a transaction. It's not being used for working capital in TipOne. It's purely for investment proceeds. The net effect of an investor by purchasing shares in TipOne to go into the portfolio is that through this 10 million rand investment, you'd own a share in Spear as well as the current TIP portfolio. So call it a 4-for-1. About 1, 2, 3, 1, 2, 3, 4. Call it a 4-for-1 deal, right? And that's the nature of a portfolio. So that's visually. If I put it up on a point form basis, right? Prospective investors would subscribe for shares in TipOne via EDPF Investment Holdings. So the point here, and again, this is something for you guys to deliberate, but the point here is to aggregate everybody into one investment group, right? The investment, as I've said, is ring-fenced for the Spear opportunity, i.e. the proceeds of the investment. However, because you are buying TipOne shares, you have a see-through or exposure to the whole TipOne portfolio. The current market price of TipOne is R1.35 per share. It's up from 120 yesterday, 125, but it'll equalize. Again, I'm not the market, so I speak under a vast amount of disclaimers and correction. It's probably going to equalize around 120, 130, 135 per share. The drive in that price over the last 2 weeks, as some of you may or may not have seen, has been that TipOne has acquired a significant chunk of Putumanati shares from an investor through a swap. And what that's done is created a large holding in the portfolio, which has obviously created a bit of market sentiment and created a bit of excitement around TipOne. What are the transaction timelines? What we're looking to do is, if we work backwards, right, the transaction, including the provision of the debt by Nedbank, would conclude by the 26th of August. So that's relatively short, 6 to 8 weeks. Maybe allow for another week into the first week of September. We can see how that goes, but ultimately, I think the line in the sand we'd like to draw is the 26th of August. And if we then work backwards from that, post today's presentation, TipOne would like to receive some kind of binding interest by the 22nd of July, which is just over a week. And that, again, that to allow for an iterative discussion between TipOne and EDPF Investment Holdings, or TipOne and EDPF participants, such that we formulate that expression of interest by the 22nd of July. We look to conclude a subscription agreement between EDPF and TipOne by the 29th of July, and then we conclude the transaction by the 26th. Why have we made the timeline short in the beginning is because we try to shorten the deal cycle in the beginning to allow you more time to raise capital, right? So if you know what the deal is by the 29th of July, you've got, call it 3 to 4 weeks in order to raise capital. So if, for example, by the 22nd of July, you're very interested and you have and you want to invest through a binding expression, it gives you, say, July and maybe into the back end of August to say, I want to structure my investment in 2 parts, a little bit now and a little bit later. I don't want to talk about prescribed minimums and that kind of thing, because I'm aware that, again, I'm speaking to a collective, but that collective may go into 1 pot. So to talk about prescribed minimums or prescribed maximums might just be a little bit misaligned. I'd rather say EDPF Investment Holdings, if EDPF Investment Holdings is interested in the transaction at 10 million, 1 million, 2 million, 3 million, doesn't matter, that would be the deal, right? And then I'm quite happy, though, to work with EDPF Investment Holdings and its investors to say maybe a good way to start is, say, 2.5 to 5,000 rand investment per person at the end of July, and another 2.5 to 5,000 at the end of August. Or maybe some people have hit the lotto and you want to put 100,000 in, or 200,000. It's really that's not I don't want to prescribe that, but I'm happy to field questions and maybe work with the team around structuring. of the transaction. That, in a nutshell, everybody, is one, tip one, two, what the spear REIT opportunity is, and three, what the transaction looks like and what the transaction requirements are.
All right, so Dwayne, Nigel, unfortunately, as he said, is sick. So if that is the of your presentation, we really appreciate your time and the effort, and it's very insightful, especially for the students. So I hope everyone took something away from this. I just want to ask, will this presentation be made available to the students to look at afterwards in their own personal time?
So I can, Karen, I don't mind. I'm just, okay, so I'm a good faith guy, right? I don't mind. Just bear in mind, please, that there is price sensitive information in the document, okay? And the risk is there are smart people in the room, the risk is there are smart people in the room. Please don't go in front, run the tip one price. You will get into trouble. Okay,
so the one thing that I can then suggest is just to forward the presentation to Nigel, and if any of the students have any questions or they do show interest, that then they can sit with Nigel and yourself and work the process again in their own personal time. You know, you guys can set up a meeting and whatever. So we'll do it that way, just for safety and sensitivity. And if anyone's got any questions for Dwayne before we log off, please do so now, and then we can wrap it up. Obakeng, go for it.
Thank you. I think my last question to Dwayne would be rather, I think, like, you know, investments are always a long-term player, you know? So like, one, as us buyers buying into it, what would like the advice sort of be? Would it be to hold for a long time, like as per the 10-year and beyond or whatever? And I think my last one would be, you know, like with solely being based on PEE, you know, like what would be the safety net should that disappear for maybe like our investments? You know, like, is there like a longer term play to say like, look, we can sort of divert or, you know, move funds towards this area, or, you know, just to keep that momentum going? Like, I get this risk, but, you know, just to have something like a safety net of some sort, or maybe like a long-term play, like as one would like invest in tip one, you know, beyond 10, 20, 10, 15 years, you know, like what could lie there for someone who would like leave their money in with tip one? Thank you.
Yeah, great question. Is there another one, or shall I answer that one? Okay, so let me answer that one. Okay, so we're all property people here, including myself, right? Within the room, there are speculative property holders, flippers, right? There are greenfield developers. There are buy and holds, right?
Yep.
So property is just an investment class. Tip one is just an investment class. Listed shares are just an investment class. You need to decide which one of those three you are. You could be a trader, you could be a holder, right? That is a personal investment strategy and a personal, it's an outcome of personal circumstances, right? You may be in it to make 20% in a month, or you may be in it to make 200% over 5 years. That's up to you, okay? However, what tip one does is tip one gives you the option to be either. Within the BE share environment, okay? That's all it is. I know what I would do from a personal perspective, okay? But it would be wrong for me to enforce that. And also, if I gave a view, it might kind of skew some people's thinking, which is not, which wouldn't give me, which wouldn't sit well if this recording ever went outside.
That's true.
I'm not here to give personal advice.
Financial advice. No, I got you.
In a group session, right? I'm happy to do it on a one-to-one basis, no problem. Right. Now, your second question is a very good one. Your question is, if BEE goes away, what do we do? Right? Okay. Let's look at that in a couple of parts. if BEE goes away, BEE is just an element to invest in. Okay, BEE was put in place to allow Black investors or previously disadvantaged investors to come to an equal term and equal footing with, in other words, to remove legacy issues. Okay, so that is a sweetener in terms of the investment. It doesn't mean that this is a BEE is not the only thing that drives an investment case in TipOne. Okay, why do I say that? Because we have said no to certain BEE investment schemes. Okay, where the economics of the deal doesn't make sense. Okay, because the economics must first make sense. The price, is the deal priced right? Is the company a good? Because you can have a great company and a bad price. You can have a bad price but a good company, right? BEE is just an overlay on it. So that's on one perspective. On another perspective, is BEE ever really going to go away within the South African landscape? Maybe not for the next 50 years. Okay,
that's true.
It's probably going to be an intensifying of it, if I'm very honest, right? Thirdly, what happens is TipOne as it stands now is an equity focused product. Okay, remember I said TipOne. What you'll see come across in the next, call it 2 to 3 years, will be Tip2, which will be focused on debt, and Tip3, which is going to be focused on private equity and infrastructure. Okay, Tip2, meaning debt, is going to look at how does Tip enable the average man in the street to buy into high yielding debt instruments. Ntaki, I see your hand. I'll be with you now. How do you buy into high yield debt instruments that are only available to sophisticated investors? Okay, that's what Tip debt is going to do. Tip private equity is going to say, how do we democratize the capital market space in the private equity sector? So you get great privately held businesses, right? That are worth $1 billion to $2 billion. But unless you have a private wealth manager at one of the wealth management houses, you will never get to know about it. You don't have access.
That's true.
That's what we call that's where it's going. So it will expand in terms of its portfolio. Ntaki?
Good evening. Thank you very much. I have 2 questions.
Sure.
My first question involves the debt. What would happen if you're not able to pay the debt on the debt on the MTN and on the Spear? What will happen if you're not able to pay that debt? And question number 2, the question that I have, it's around your investment. You only invest on the BEE schemes, right? And on those BEE schemes, do you only look at those 3 fields like oil and property and telecommunication? Do you also diversify to other fields? And if so, if you do so, are they going to be other BEE schemes that comes into play after I've invested? And will my investment be considered when you do so? Thank you.
Great. Again, very good questions. So let's answer let's get the millstone off our neck around the debt. Okay. So if let's deal with Spear. So if the 30 million rand loan was not being able to be serviced, okay, you as Ntaki are not on the hook for 30 million. Spear is on the line for 30 million. Okay, that's why we've structured a deal with 10 million rand equity, 30 million rand debt. So 10 on 4 is 75-25 equity debt split. Okay, so step 1 is to mitigate the risk of non-payment. Right, so it's all fine and well. I can stand here and shout to the top of the hills that, you know, you're not on the hook, you're not on the hook, you're not on the hook. But the point is to not default, right? So that's why we structure initially, correct. Should there be a default, you either will Spear itself, in the Spear example, will renegotiate the debt with Nedbank, right? And given that Nedbank is the banker to Spear, that should be possible, right? If if the debt's not been able to service, there might be some kind of what's the fancy word now? Forgiveness, right? Around moratoriums until such time as Spear itself is able to restart repaying the debt. Okay. In the case of MTN, this is an interesting one. It's a real life example, right? MTN itself is a provider of debt to MTN Zakhele Futhi. Okay. When that loan is not able to be serviced through MTN dividends, MTN itself writes a check to pay the debt. Remember, the crux of the matter is that the schemes, the BE schemes, cannot really afford to fail. There's massive reputational risk to a corporate through a failed scheme. Never mind scorecard implications. Okay, so those are the only real answers I can give you in Taki. One is your balance sheet as an investor is not on the line, right? The extent of your loss is a potential loss of equity. Okay, but because you own a listed share, you can recover the equity. You can recover it as the share price recovers. Right?
Okay,
so that's around the debt. Okay. Around the investments, yes, our current philosophy and our current investment thesis is only listed or near listed BE shares. Okay. Why? Because we believe that's where value that's where value lies, right? And we must make no bones about it. We operate in a commercial and investment landscape in South Africa that provides opportunities to BE investors. That's legislation, right? That's what we're looking to take advantage of, right? Now, do we only invest in these sectors, telecoms, pay TV, oil and gas? No. Our investment universe says any sector in which there is a viable BE transaction. So you'll see we haven't done a property one. Property is now on the radar, right? Excuse me. As I mentioned, we've got 2 shares on the watch list. One in the healthcare space called LenMed. Okay. The other one is the SAB's Nzeli Kabili scheme. SAB's BE scheme. Thirdly, we've got a packaging business that we're looking at as well called Transpaco. Transpaco are looking to do a similar type of deal as Spear are doing. Okay. So no, the answer is it's not the fancy word is it's sector agnostic, right? We can go to mining, we can go to healthcare, as I said, pharma, we can go to resources, we can go to renewable energy, we can go to any sector on the JSE, right? Then your third question around, is your investment considered, right? Yes, because you're an investor today. Whatever other shares are brought on board in the portfolio, naturally as an investor, you will be given an opportunity to buy more shares such that you can participate in a larger part of the opportunity. But because you own one TipOne, so for example, if we just said TipOne's got 100, 1, 2, 3, 4, 5. TipOne's got 100 Rand, right? You put 100 Rand in. It'll be 20 in Spear, 20 in Zakhele, 20 Yebuyetu, 20 Putumanati, 20 in Solby, right? Say another one came on, okay, but you didn't increase your 100, right? It would be 100 divided by 6 then, not 100 divided by 5.
Oh, okay, I understand. And then I'll get dividends on the first 3, and then for MTN and Spear, there's a debt around that, so I won't get any dividend from that.
You would get, if you invest today, right, or tomorrow or month, whatever the case may be, whenever any of those shares declare a dividend, you will receive that dividend. It's not ring fenced to say, oh, you did Spear now, right? So therefore you don't get Vodacom yet. You with me? It's the whole portfolio. But your question is yes. Okay. There's nothing at Spear. There wouldn't be, right? Because it's got a 10-year debt period. But you would get from say Putumanati or Solby or Yebuyetu. When MTN Zakhele Futhi matures, you'd get that special dividend in 2024. Your pro rata share of your one holding.
Oh, okay, understand.
So no, it's not like you use today and you don't get what is there tomorrow. That's not
okay, guys. I'm going to jump in here now and thank Dwayne for his time and for sharing his company with us. If you need any more answers, you can send them to me. Send your questions to me, and I will forward them on to Dwayne and then post the answers on the group. But for now, Dwayne, thank you very much for your time. It is 8 o'clock and we are going to shut this one down. If you want to revisit, I'm going to post the recording on the YouTube, and then I'll send that link to everybody on the group. So guys, thank you very much for your time. Have a great evening. Thanks, Dwayne.
Thanks, man. Nigel, just one request. Can I ask questions come through on email, or is that a bit too cumbersome?
If it's going to go directly to you, that's okay.
But I think they should copy you in at least.
Yeah, copy me so that I know what the question and the answer is, so that I can post it on the groups.
Yeah, look, I don't mind either or, but I'm just, sometimes if you get 400 WhatsApps, it's a bit complex to answer.
That's normal. All right. Okay, guys, thank you for your time.
Thank you very much.
Soon.
Thanks, everyone.
Cheers.
Thank you.